The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, soybeans soared on Monday amid a short covering rally, leading the broader grain complex mostly higher. Livestock had a good update as well. Chatter of weather concerns out there for soybeans and spring wheat in particular, but should we pump the brakes on this and take a look and see if this rally could potentially hold longer term, or if this was a short move? We're going to talk about all that today here. Joining us for market analysis, John Heimberg with Total Farm Marketing. John, thanks for being back with us here on the show, and nice way to start the week with a huge pop in this soybean market. Really held 20 to 30 cents higher throughout the session Monday. Now, we got this talk of some heat moving into the northern plains and the western Corn Belt in particular. Have to think that was a piece of the puzzle here. What's your assessment of this short cover rally we saw on Monday, John?
Yeah, I'd say there's a few moving parts going here. Let's obviously focus on that bean market here, and that's the driver today. And, I believe the corn market just kind of fell in line with the buying overall and the mentality in the bean complex. The weather becomes the underlying theme very, very quickly. The old saying, beans are made in August, things of that nature. So we'll have to watch what the forecast is. Look like we're getting warmer, we're getting drier. We don't have anything outlandish. It's not a doom of death, dome of death coming or anything like that. In terms of heat dome, there is still some chances for some moisture, and we need those to realize. And I think the corn crop, in some of these areas, we got two crops. We got the early crop that got in before the wetness, and the later crop. That later half could use a nice shot of rain to finish out, as they're probably tasseling it or pollinating here a couple weeks behind the others. So that could be a little bit of a factor today. I do think the biggest thing that in soybeans, we've had such a hard sell-off to get to these lows that we were at last week. And we finally fired up some business on the export front. We had 3 days of soybean meal sales there, 4 or 5 sessions. Throw in that fairly good-sized bean sale. There was talk that Sino Grain, one of the main Chinese buyers, was in the market for 10 cargoes of beans last week for new crop. The cargo is about 50 to 55,000 tons. That sale was 500,000 tons. So, there's confirmation possibly of that type of action. I don't think right now end users, exporters, or importers are going to be aggressive into the soybean market, just given the supplies that are out there globally. But they may have hit a point where it's, hey, let's cover some needs here after a pretty good sell-off, keep our options open. If the market continues to fall, we'll step back in again. So, I think those are all factors into it, adding to the fact that the funds actually started to move a little bit out of that corn market on their short side last week. Soybeans hit a record short, so the market was ready to make a move. And that just kind of triggers this type of a play to start the week. So now the key is, do we get follow through? What happens with the crop ratings today? If we see corn and soybean ratings go up, are we going to hold a 30 cent, 10 cent rally? If we have anticipation of a better crop. So it's a point here as I would be cautious and not over optimistic, because the supply, the demand, those stories are still going to be the headwinds on this market here. And, for a producer that's been sitting back waiting for some price move, here comes an opportunity to maybe get some corn priced, maybe get a put or two in here, protect some value, because I don't think our fall low is in here yet at this time frame.
Yeah, don't put the bullhorns back on just yet. One day does not make a trend. That's the old thing I think about, John, the old saying I think about. And let's break this down a little bit more, because you mentioned the funds at or near record short. We got commercials who are a little long, farmers kind of caught in the middle of this. Some farmers got to move some old crop that they have left, or they haven't done much new crop marketing. This speaks to what we've been talking about on this show for weeks now, John, is that, a lot of farmers don't like these lower prices, but here is Monday, case in point, a day to potentially manage some risk on a nice up day. I mean, talk about that a little bit, John.
Yeah, and that's some of the thing that builds the optimism on days like today, is the fact that we've been so beaten down. And, and talking to a lot of producers, it's difficult right now this year, especially if you're behind on your sales. So all of a sudden we get a move, and I probably fielded 4 phone calls today. Is this the turn? Is this the rally? Like we're expecting things to rally 75 cents and get back to $5 here, or something along those lines. And again, the heavy supply picture is going to continue to be the weight on this corn market going forward. Now, obviously, there's a lot of things that we need to get to the finish line here yet with that corn crop. So again, could be just some movement here. I think still at this time frame, rallies are meant to be sold until proven otherwise. Again, if you got old crop bushels in the bin, you don't want to pull the trigger if you think we rally. I picked up for some 390 puts for 6 cents today. That's where we started the day at. Just put a floor back underneath the bin, especially if you got corn sitting in the bin waiting to move, or you got a basis contract that's got to get filled here or priced here by the end of the month, next month. And, here's a cheap way to put a floor on and keep your opportunities open with some of those types of contracts here in the short term. I've got quite a few producers I still talk to that are sitting on a fairly good supply of old crop corn that are going to need to move it here because of the potential crop coming. They just need some space in that regard. And same thing on the soybean side. Right now, again, I like that little pop in demand. We'll see if we'll get some more movement there. Now, the bean market can move fast. Traders love beans. The momentum traders will jump into a bean market fairly quickly. You do look at the chart. We did try to edge out a bit of a reversal on Thursday last week. Didn't do a whole lot on Friday. And then here comes a nice little move higher, the kickoff the week this week. So we'll see if that holds or not. There are some things on the bigger scale that are still supporting beans in terms of those global prices. We're seeing the Brazilian premiums come up here as maybe they're kind of slowing some of their soybean selling, especially with the corn harvest going on at this time frame. They're moving more corn than beans. The biggest concern and the biggest thing we still need to focus on, in my mind right now in these markets, it's not so much the supply that's there. Where's our demand? If we need to get 200 million bushels off the balance sheet or 300 million bushels off the corn balance sheet, we need somebody to step in and aggressively buy some corn, over worrying about a percentage point or two on crop conditions or a bushel per acre somewhere on terms of final yield. We need to get that sales in here to get that product moving, and that will truly could be what turns the market.
Yeah, it seems like until we get that demand picture picked up, in the case of many of these end users, they're only going to, find what they need to find kind of hand to mouth. You mentioned that term to me before, that until we get some more of that demand, it seems like. And then I think that's got farmers, a lot of these end users, commercials, they know that a lot of farmers in the U.S. are sitting on crops still. They know the supplies that are out there. And so that plays a role here as well, that you really look at the markets in the grand scheme of things, you got to think about here, just that it's just this whole position that we're kind of caught in right now, John.
Yeah, very much so. And, and to me, that's going to be the thing that turns the ship here is going to be the demand. Like I said, that maybe that's what's turning the bean market a little bit, is all of a sudden that just a little awakening of demand here when we hit those price levels last week. That's still got to be the focus going forward. It's just, we got to get this product sold. We got to stay competitive in that regard. And that's something, obviously, we'll just have to watch. Those corn sales last week, export sales are very disappointing for old crop. Now, I know we only got 5 weeks left in the market year, and they typically slow down here. But it'd be nice to still keep building some pace there. Even if it gets rolled into next year, at least we're building some more movement. I think that's been something weighing on the markets as well. So that demand factor, I think, is the biggest piece of the puzzle right now. If producers are truly looking for a turn in this marketplace, we need to get that demand piece working for us.
And I know, too, this week, the spring wheat tour going on in the Dakotas, they're going to have some routes into South Dakota as well for the first time in a while, a few extra routes, it sounds like there. And so I have to think that tour is probably going to confirm what's looking like a good spring wheat crop. And you mentioned this to me before we went live, that the spring wheat market didn't necessarily hold its rally all the way on Monday. So that wheat market, I'm curious to see how that trades here throughout the week.
Yeah, the weather on the Canadian prairies, northern plains, that is obviously going to be a big focus. We saw a fairly good double-digit day that did fade back, but caught a little bit of a bid at the end of the day. So those ratings are going to be key there, where we at in terms of that crop. But at the same time, I still think we're looking at a very large, SRW crop getting harvested right now. We're kind of through the KC, or the hard red winter crop, in terms of its harvest. So that's still just going to be a headwind over top the wheat market in general. Now, the different classes can act so independently, based on their uses and supply. So, but, if the spring wheat crop really does start showing some issues, which last I checked is very well rated in terms of its ratings, it could at least give that side of the market some spillover into the other classes.
We're talking today with John Heimberg from Total Farm Marketing. John, let's go to livestock. Cattle reacting, I think, a bit to Friday afternoon's cattle on feed report, but largely just a good kind of up day in the proteins across the board as well, with grains higher too. Your assessment of the cattle trade, that on feed number that we got on Friday, the placements number as well, et cetera. What's your thoughts there, John?
Yeah, that report overall, when you really got into the numbers on the report, it was actually a little more neutral to friendly than negative by any stretch. And I think the market was pricing in, we're going to have more cattle than last year, and, placements are going to be 90, fairly firm. And that didn't come to truth here in this regard. Cash trade obviously was a factor last week, and the retail value is not liking the fact we've gone from 330 to 313, 314 carcasses on the choice side. That'll probably spill over into cash. Last week was slightly lower, steady in some regions. I would say if we don't see the retail prices come around, we'll probably be the same trend on cash again this week. But that's still running a pretty good premium to August in terms of where we are, 190, 196, 198, whatever cash in the north, all the way down to, the upper 80s there that over in the south. So we'll see how that plays out. Now, getting into that cattle on feed numbers, first off, 101% over last year. Realistically, don't forget the USDA rounds that report. The actual number was 100.5%. So there's a full 0.5% that was just added on the round. So you went in and actually did the math, cattle this year versus last year. The only difference was about 70,000 head, and that's not even a full day's kill. Marketings were a little lighter last month. We obviously had the Juneteenth holiday in there. We had a couple plant closure days due to some issues in there, or just trying to keep the chain down. If we're running at full speed in terms of the marketing side, cattle numbers are below last year off of that report. And I think that's some of the fuel that we got. Then throw in a lower placement number. That's why we saw the strength in the third and fourth quarter again, or in first quarter in the next year, and fourth quarter. We'll get it out here eventually. In terms of that regard, because those placement numbers are still there. So what's this mean in the big picture? Still very concerned about the cattle demand side of things in terms of the products. If that retail price can't kick back in again, this market probably just doesn't go anywhere for a while. I think it stays supported because of the supply. The demand is still good enough to keep prices where they are. Typically, now we start thinking Labor Day is the next holiday coming up here. 1st August, we'll start seeing that buying for that window. Last year we put our high in September, on the first part of September. So to me, I'm still a little bit of a seller on any type of move on the higher side here, just because of the charts, the historical side, and the possible volatility we got coming up as the election moves closer to us in the first part of November.
Yeah, John, you think about demand, there's been some good pork demand here as of late, it sounds like, and that's kind of added to some technical support in lean hogs. That's something we haven't been able to say a whole lot of here this year. Support in the hog market. I mean, what's your thoughts on that?
Yeah, nice recovery rally going on in the hog market right now. Now, maybe getting a little long in the tooth in the August, especially with the index trading below the futures price with only a few weeks left in that August contract. So, shift your energy to the December or the October. Good price recovery, nice technical close today. Maybe we got a couple more dollars there. I like the fact pork carcasses are back in the 102 window. Nice move higher in direct cash today. But again, it's still going to be a market that's going to have some limitations to it. We'll see if we get up around the 70 mark on that December contract. That'll be a really big barrier to get through. That'll be a nice correction point. It's also a consolidation point from back in, end of June, first part of July. Then from there, I'm probably going to sit down and try to assess this thing. Do we have more room to the upside? Wouldn't be surprised if we just grind there for a little while till we get that August contract out. But at least we got a little bit of a price recovery off those lows, which were pretty doggone disappointing a few weeks back.
How about the dairy market, John? Any notes for us there this week?
Right now, again, it's a market that just seems to be trending sideways, maybe grinding a little bit lower. I mean, you go look at the charts really since mid-June. That September, that August contract's been working the $21 to $20 window, or 20 and a half, the 19 and a half window. Now we got schools kicking in here real soon, so that helps out on the retail demand side. So I have to watch that. Cheese prices have been relatively stable. So with that, the market's been stable. So it's providing at least some stability for producers to make sure you get your floors put together. Still watch things going forward, but obviously cheaper price of corn coming with that stability in the milk market. At least things have improved there for the dairy producer compared to where we were back in the spring.
John, great stuff today. Any final thoughts you want folks to think about here before we let you go?
No, stay vigilant in terms of that grain marketing side. The picture is still not the best overall because of the supply and that just overall concern for demand. Again, use your rallies to build floors, to build some sales in. If you got those opportunities, look at the ownership side if you think we want to stay in there. But right now, there's still downside targets in front of us here that we haven't closed the door on. So we need to make sure we're still conscious about those, because another 30 to 50 cents lower in the corn market could be pretty painful when you have an opportunity to make a few sales.
John, if folks want to reach out to you, get some advice there at Total Farm Marketing, how can they get in touch with you?
Sure. Give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com.
With that, John Heinberg, always a pleasure. Thanks for joining us on Market Talk today, and we will talk to you next week.
Sounds good. Have a great week, everybody.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.